Hello, everyone. Holy geez, you got that camera zoomed in there close. Wow. Holy moly. I don't know whether I like the camera that zoomed in. But anyway, hey, hello, everyone. Welcome back to the rationalinvestor.com's daily brief. Woohoo, party. No, 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 no. Happy Tuesday morning, January 17th. Hope you all enjoyed your Martin Luther King holiday yesterday. And futures markets were open yesterday, but stock markets were closed. So anyway, here we are, Tuesday 17th, bright-eyed and bushy-tailed, and actually again, like some nosebleedy signals out of the market here. As you see, the breadth indicator for the S&P 500 has come off quite sharply. I don't remember seeing that at the end of last week. And 16th, like we said, was a holiday. I'm not quite sure what Stuart has going here. I wonder if maybe the data was slightly messed up there. Anyway, I suppose we'll get to it through the episode. My apologies. Yesterday was a holiday, so technically everybody on YouTube got an extra free sort of rant or two based on the holiday session. And actually, I'm feeling a lot better. Was a good idea to just basically park myself in jammies and in bed through the weekend, try and feel a little bit better. So this morning I'm feeling. This is the first morning where I woke up and went, okay, well, at least I'm feeling relatively stable. So that's good. So happy post Martin Luther King. Actually, this is interesting precedent being set here. Of course, Klaus's Great Reset and what is God, these people, they are just shilling the fourth industrial revolution and all this heading into the new century. I mean, it's just incredible how they're just ramming it down our throats. And usually if you're getting a message rammed down your throat, then actually it's not a real message. It's some sort of, they want you to do something. They want you to buy something. They want you to think about, the poor environment and global warming and all that crap. And I thought it was fascinating. I saw recently, I'm seeing more and more in our society, more people are sort of standing up and going, hey, this is BS. Clearly we're being lied to and manipulated. So we'll see how it goes. I suppose probably a big part of the 21st century is just getting used to this new, funny, weird online world that we are living in. I suppose maybe that's a big chunk of this fourth industrial revolution. Anyway, on to markets. Did find it interesting that you can see the stock market was looking a little waffly, and then of course if we zoom down to the histogram, we had like over the weekend, like yesterday specifically, very, very overbought signals from the breadth indicator. And actually, one thing I'm going to do from now on is I'm tracking. This is sort of like every term I like to do like a new trading plan, try and demonstrate different ways to trade to the market for you guys. So this particular term, I'm doing the DI breadth algo. Kind of let my trading partner down. I haven't been so active on the opening range trades this morning, but like I said, I gave myself permission to sleep in because I was sick. But should try and get back on the wagon there. Anyway, so what I thought, and of course, this is constantly morphing as I sort of build this plan out through the year. But in essence, I'm going to take every sort of signal in BTC that the algorithm produces a signal off of. And as you can see, I just liquidated last night. The system, I guess, updates, I think about 9:30 Pacific time. And that was basically right in there last night. I thought it would be interesting just to track, the actual price action itself. And interestingly enough, right on the New York retail open, really, really good analogy of the kill zone. So there's 5:30, and then the next candle. Keep in mind, this is an 81-minute candle, so kind of screws people up. I go 30 minutes. There is 6 o'clock. There is 6:30. So there's your sort of pre-market, get everything ready for business, retail. Pop the top and then broke back down. Now, I didn't necessarily endorse the idea of shorting, although frankly speaking, I don't really mind that idea. But for the time being, I'm just going to run this as just nothing more than just long only. So long signals tell you to go long. Short signals tell you just to hop off and sit in cash. Also, too, considering we're doing this on Binance, the question really is Binance going to tip over and explode here? It wouldn't surprise me, to be perfectly honest with you, and that might be a great anecdote going forward. So for the purposes of this, to try and keep the commissions down as much as possible, I'm going to put it into the BUSD. And it's only a couple grand, so it's not like it's a hell of a lot of money. And like I said, if Binance blows up, then it blows up. But if you do that, then they give you basically no fees, no commissions on the trade. Now, obviously, that's a trap. And it's probably the number one reason why they want you to do BUSD, right? Obviously, that gives them liquidity. And we'll see, right? If Big Brother wants to destroy Binance, they will rip that thing apart, just like they did with Luna. So first off, the indicator. This is the whole reason for acting. As you can see, it was sitting up there like Friday, Saturday, Sunday up at like 100, both lines. So you knew the sell signal was going to come. It was just a question of when. And sure enough, that fired. And if you want to just track, but I'm quite pleased to see now we can say year-to-date price performance 23% return. And ironically enough, if that's the only trades I do and I shut the whole thing down and I finish the year with this fund at 23% return, fine with that. Do that 3 years in a row. And I could probably take this thing to Wall Street and get funded $100 million for a fun little mutual fund. And probably at the top of the next crypto market, that's probably what we should do, because kind of have to monetize all this work and take it to the next level. Got to shop for that island, right? Anyway, so point here is had the algo signal to basically cover that long trade, and I think on balance that's smart. I mean, I think the tweet that I put out was to the effect of, look, I'm not here to tell the market what to do. This thing gave us just absolutely insane. It was like 25%. It's like 24.73% in like 11 days. That's ridiculous. And this is the funny thing with crypto. People always get this way with crypto. They don't realize the massive percentage moves that happen in just lightning fast periods. Keep in mind, the average annual rate of return for the stock market is supposed to be 8% with 3% dividends. So, average about 11%. So, and 25% just in one trade in 11 days. But people, moon, all that kind of talk. So they almost kind of lose focus. Anyway, coming up into Foggenbaum levels just above us here. So also too, I think that a lot of what's going on here is this is a liquidity hunt, right? And then we went after the stops. You've heard Brian talk lots about that in the past. So I don't know if this thing is actually topped out. My feeling is, for whatever it's worth, and then I suppose we can get back to what we're supposed to be talking about. My feeling is that we're going to do something like this. I do like the idea that the market is going to just slowly go after these respective highs to hunt that liquidity. But they always say that market moves in a symmetrical fashion. And if you just, just the easiest way for you to think about this, watching this in the public, is think about the head and shoulders pattern. I mean, kind of looks very symmetrical. And we as humans, we love symmetrical images. In fact, probably even look at that. And if you have any kind of autistic tendencies, right, you want to, okay, I got to move that right there, and I got to move that just over one tick, and got to make sure that that's horizontal, right? And then we got to make sure, okay, that's lined up, right? And the more symmetrical it is, the more you feel good about it. So you can think of the head and shoulders as a symmetrical pattern. And really, the easiest way for you to think about this also too is something like the maple leaf, right? So hopefully you can kind of see like big shoulder, maybe neckline, maybe head, maybe neckline all the way back up top there, maybe shoulder all the way down here. But even within this, right? Shoulder, neckline, head, neckline, shoulder. So it's not like I'm like uber bear. And keep in mind that this algo, it spits out buy and sell signals through the year. So it's probably, my hunch is, for whatever it's worth, it's a total guess. My hunch is we're probably going to get maybe about a half a dozen signals through the year. Where do I have that? Yeah, over here. So, I mean, the last signal was there sort of, early to mid-December. I would argue now we're getting a flash the other way. So it is that. It's about a month and a half. So if you put that together over the whole year, what you'll probably see, if I do this job correctly, is you're going to see probably somewhere between a half a dozen to a dozen notations here. Not a lot. And, just trading setups off of sort of higher time frames. I like the idea that as this image sort of points out, this game's all about ebb and flow. So I do like the idea of maybe just a nice consolidation here to set up our next run up top. And my hope is, maybe we get a bit of a consolidation. And then as time goes by, the DI or the breadth indicators comes down in the oversold zone, starts Wing out, and then that can justify us hopping right back on the long side. So anyway, we'll see how it goes. I got to say, I was pretty darn pleased to see that trade. That worked out very, very well. And it worked out exactly the way this thing's supposed to work. So way to go, Algo. You're awesome. All right, so that's that. As I had sort of said, it's interesting how S&P's really backed off here. I'm not quite sure about the data point here. I know today is Tuesday. So usually we do have our CTO on the call here today, Tuesdays. I don't know whether he's shown up yet or not, but if he does arrive, I suppose we'll have him for the after show. So, oh, okay, cool. All right. There is Sjord. Sjord's here. Hey, Sjord, you want to say hello to the world?
Hello, world.
Hey, yeah, how can you tell he's a programmer? That was very well said.
Yeah.
Yeah. Thank you, sir. And of course, Chris has been given instructions. You have to talk more, sir. So hopefully we'll hear more from Chris as the days go on. So okay, so why is all of this stuff happening, right? And this is why we like to call ourselves rational investors, is we kind of want to know, like, what's the reason? What's the fundamental reason why this stuff is happening? Interestingly enough, when I loaded up the screen this morning, like most of the tech stocks have been in the absolute doghouse for quite a long period of time. But now it's like the pendulum is shifting. The tech stocks actually look relatively happy. And interestingly enough, when I look at crypto tried, like Litecoin was looking very, very uppy there, sort of like a lower tier crypto, kind of like the broader crypto market. But here, here are the various different stock indexes, and you can clearly see who's leading the charge here it's the yummies. And if you don't know what the yummies are, that's the Dow. And wow, what a nasty double top fail here. So the question is, what the heck's going on? We don't have it on the site, but I suppose down the road, maybe we can add market carpets and stuff to our analysis tools. But as you can see here, where's the major selling coming from? It's coming from the banks. And everybody kind of knew that the banks were going to get punched in the nose here and things were going to get a bit ugly. So now you're actually seeing it. Look at that. Goldman's actually down 7% on the day. So lots of whiffle waffle out of the financials. And because of that, that is driving the Dow lower. It's interesting how, like I said there a moment ago, NASDAQ and actually even the Russell 2000, they don't really want to go down. And like I said there with Bitcoin, I don't really have a short setup working. It's just, holy moly, the market is very, very overbought. I mean, ridiculously so. And then the algo flashed finally. Okay, it looks like things are starting to break. So, the plan is just follow the algo and get the hell out of there. So, a lot of sort of Goldman Sachs profits plummet on deal making drought. I think that's probably the theme of the day. I suppose there's some other drivers out there in the market, but I didn't really see anything that really jumped out at me. Interesting how now, I was telling somebody earlier this morning that they really should get to know that Peter Zahn guy. Really, he has got such a hard on for Russia and China's economies to basically implode here over the next 5 to 10 years, which is fascinating, right? Because if you turn the clock back 5 years and you asked anybody on the street, they would have said, even that Ray Dalio guy, he's like Mr. Fund Manager, Mr. Big Shot. He thought that China was going to take over the world. Now we're actually starting to see news articles about China's population starting to shrink. Is that COVID related? I don't know, but interesting how they won't disseminate statistics. I did see a quote though there the other day. They said something like, and you just don't know the numbers. 60,000 people died of COVID there just recently. That's the number that they're giving out. So if the government there is actually saying 60,000, it's probably like 6 million, So anyway. The hell of a lot of gun violence in this world. Of course, can't touch that political hot button. Interesting to see how Mr. Biden, I went on a rant about that yesterday, how it seems that he's getting his feet in the fire over documents. Other than that, news-wise, I didn't see anything that really shocked me. I think, like, more importantly, it's more fundamental drivers about corporate earnings. Did have some Econs come out. So they didn't help the situation either, though. So you can see that the headline here is Dow comes off more than 300 points. What are we, 362 now? I've been talking about, I don't know whether you guys saw the January barometer reports that I've been putting out, but in essence, I am thinking that we should whoops, that's not what I wanted. We should probably be thinking about, what the hell am I doing here? It's not that one. Where the hell is it? Here it is. We should probably be thinking about what the heck this January barometer is trying to tell us here. I mean, it is interesting how Bitcoin just had one hell of an insane rally there. I don't know if January barometer even works for Bitcoin, but wow. It's interesting. One OG I haven't talked to in a while, but whenever I tweet, he always chimes in with his thoughts. He was going, as January goes, so goes the year. Let's rock this thing. So anyway, interesting. As you can see, I was dabbling in the idea that tops might be coming in the market. And, if anything, what a beautiful story about the New York kill zone. Because this top looked so perfect last night, and I was squawking about it in the lounge. I kind of missed my wake up call here this morning with my trading partner to trade the opening range trade because I was too busy in the lounge screwing around at like 11 o'clock last night, liquidating the Bitcoin, and then looking at this going, oh, man, I see a lot of reasons for this to come down. I still think that this trade's going to work. It's just that they went after this and they blew out that top. This was a paper trade, so it wasn't like it was real money. I wouldn't take that kind of risk on a real money trade, but I did want to, I was conjecturing about whether this thing should top out. So on top of the fact that we had poor fundamental earnings news out of the banks and the financial sector, which actually aligns with our first 2 weeks kind of thinking. You know, we had shown yesterday in the first 2 weeks that, what time is it? Yeah, okay. First 2 weeks that the financials were going to underperform, but things like communication services, discretionary stuff like that seemed to be performing better, which meant that the financials were not going to perform well because we were not in a friendly part of the cycle for them. And sure enough, their numbers came off big time. The econs that came out today, though, were very, very bad. You don't really see this kind of data print every day. And more importantly, so like here's the econ calendar. I had a lot of Canadian inflation data and Canadian issues here. Still running way, way too hot. It does look like things are calming down, but keep in mind, they've gone and jacked prices up. So now you're going to have like the talking heads are going to be all like, oh, look, inflation is actually coming down. But that doesn't mean prices are going to go back to the old levels. No, we better get used to this new pricing model. In fact, I've seen a lot of articles recently, like people in Toronto, for example, and it's fascinating because this is exactly the same thing that happened 40, 50 years ago. I mean, it's identical. I always tell people in the education program, I remember specifically in the late 1970s, and at that time I was less than 10 years old, sitting at the dining room table with my mother and her in tears because they just raised the price of bus tickets from 25 cents to 35 cents, and she couldn't figure out for the life of her how she was going to afford to take the bus to whatever work she was doing at that time. And of course, she was in tears. And I just read recently, I mean, I can't pull it up. I had it up yesterday, that exactly the same thing is happening in Toronto now. And people are literally, they can't afford to take the bus. A bus ticket in Toronto right now is something like $3.50. And that's cheap. Like here in Vancouver, a bus ticket is like $6 or $7. It's ridiculous. So, I mean, Mr. Substitute drama teachers completely fucked our country. But anyway, of course, you all know my opinion about him. Anyway, so that was sort of the big news out of Canada. You know, just this inflation problem is just an absolute mess, and it doesn't look like it's going anywhere. Probably more importantly, because keep in mind, Canada is a relatively small country. Typically Canada is about 10% the size of the US economy. So really anything that happens in the US, the Canadians just follow suit. Anyway, so US econs, interesting how they have really important information out of Canada, but not really more important. This is probably super important. Look at this number. Holy frioles. So the economy of New York, and this is actually pretty close to where you are. You're in New Jersey, aren't you, Chris? Are you back up north again?
I am. I am in New Jersey, right in between Philadelphia and New York.
Right. So you must see this. I mean, basically, New York State is just cratering here. It'd be interesting to see what the Philly Fed surveys are. And then, of course, if you look at the chart, right, what are we supposed to think when we see lower highs and lower lows? And, you know, if you just look at it on a histogram, it's really evident that we just went and blew out this low here. So that's not a good trend, folks. I mean, in essence, New York State is still contracting. And of course, given the interest rate increases, that makes perfect sense. So you put the two together, you got really crappy earnings coming out of the banking sector, and you've got really bad economic conditions in New York, and of course, New York's got New York City. New York City. If anybody knows that reference, if you go New York City, that's a reference from last century. I don't know whether any of you even remember that. Anyway, you put them together, and oh, what a big surprise! U.S. Major indexes are getting smoked, but interesting how the Nasdaq is trying desperately to hold on to gains here. So a bit of a mixed message. I get the impression it's almost like the big caps are a little bit sanguine, but the junior market had already been beat up so much, and it's probably also too sort of enjoying a little bit of the what they call the January effect, where the smaller cap market, because it was so beat up into the end of the year, end of the calendar year, 2022 respectively, that they often in January have a little bit of an outperformance window. So you're back, and as I said earlier, and I this is why it's so important this time of year, just to half of your job is just to sit and watch and listen. What what is the message of the market? Not what, but what is the message of the market? Oh, and by the way, I got to give a shout out to my old roommate. Of course, I haven't talked to him in forever. But at the same time that I got him to buy this little piece of shit CLAS that basically went off the board. Way to go, Brian. He actually got me to buy this NVCN. And we bought this level here. It went right into the toilet. They rolled the stock back, and now look at it, just absolutely going gangbusters. So I'm actually up 50% on the trade now. And it turns out that there is a company that's going to come along and take them over. But the question is now, they want to close the deal middle of the year. So the question now is the product so good that you get a bidding war? So interesting, right? They are in the minimally invasive treatment of refractory angina through its reducer system. And I think angina has a lot to do with like the heart and stuff. So, whenever they hear talk about minimally invasive treatments, and it turns out this thing actually is half decent, look out. And if anything, if we're really lucky, there's actually a bidding war that breaks out for this thing. So anybody who is in this NVCN, thanks to Andrew, pay attention. You might get handed one hell of a treat here.
Are there any signals from the dashboard we could tell these folks about in the last 5 minutes?
Dashboard, last 5 minutes. Hey, Jesus, I don't know. Did I get the message across? I do. Just before we jump over there, I wouldn't mind just touching base with that January barometer here. Give me a second. I don't know whether this is the right screen. I don't think it is. Yeah, there it is. Okay, so we'll head on over to the dashboard in a second, just look at any algo signals. So this was the first week, and frankly speaking, I think this is exactly what the year is going to look like. And you can see that's sort of like mid-week, we rallied up, booming higher, then we rolled over and we actually work our way. And think of this as sort of like beginning of the year. We're all expecting January, February, March. Vladdy's got some big thing planned. He's meeting all his war ministers and stuff like that. So I have a funny feeling there's a pretty big shock that's coming down the pike here pretty soon. Then seasonal rally into the spring, sell in May and walk away, all that kind of talk. Then a sort of rolling top into September, October, and this would be very typical, a dump into sort of like August, September, rally away. Okay, the bottom's in, then go down, and like typical Wyckoff check, that's the spring move there, run all the stops, and then just a massive rally into the end of the year. So if that's the case, then it would make a lot of sense, given that we are sort of middle of January here, being sort of up top here, that we roll over And then we have a big options expiry. Maybe tomorrow we'll look at some of the options data to give us a frame reference. Interestingly enough, and actually I should probably kill these orders here. So actually good that I saw this. We had looked, and there is a lot of open interest at the 390 level on the put options on SPY. So with that 398, 3908, that's like 390 on the SPY. It would make sense that this is some sort of support level. Now, does that happen following the options expiry? Only time will tell. But I like the idea that the market should somehow find some sort of topping pattern like up here over the next few days. So that's that. If anything, this aligns nicely with the algo signal. So as we had said off the crypto, the broader crypto market, keep in mind, this has a lot of sort of the up down proxies and a lot of the fiat pairs and stuff. So it's not going to behave like the crypto top 30, which is just strictly crypto names. So it had already broke. And then of course we were sitting up here at 100, and it was just like, it's just a question of time. It's not really if, it's just a question of when the hell is this going to happen? So last night we were in the lounge, and the engine, I think, and Sjord probably talked more about this through his presentation. It flashes signals at about 9:30 my time, Pacific time, which I think is relatively early in the morning over in Europe, where the engines are all sort of running out of. And as you can see, flashed a major break here. Also, too, if we look at the weekly commodity trend survey, now we only have 2 names that are still up top. Almost all of the names that used to be considered bullish, I guess Doge, did Doge roll over here? We're starting to get like signals that, hey, maybe the bull's getting a little tired. Okay, I don't see it off that. I don't know. Anyway, well, I'll look into that later on. So point of the matter here is, things like Litecoin still looking pretty uppy. If anything, I mean, I don't necessarily really want to short crypto, but interesting how this Shibu Inu thing, it's really come off. WBTC, I'm not quite sure what that is. CRO, that was that crypto.com. I remember that thing was it's pretty popular for a while. Interesting how XLM here. This I think the XLM, is that Monero? I can't remember. I'd be curious why this is getting such a negative reading here, but that does look like a little bit of a double top. I don't know. If anything, what I'd probably want to do over the next day or two, maybe what we'd do is pull up some of like the bear proxies and see if they look like they're putting in W's, and take a look at that. I guess crypto signals themselves, bullish reversals, and interestingly enough with these guys, there's almost always stuff firing here. Got lots of USDT things here to consider on the downside. I suppose maybe we can just quickly look at these. 14th, I guess that would be as of last week. So there. Yeah, I don't know. These are awfully thin. So if anything, probably just outright key reversal signal is probably not the best way to trade these things. Momentum pushes. It might be interesting to see what comes out over here. And for time purposes, we should probably wind this up. So I wouldn't necessarily, I'm not going to do any sort of research here today on these various names, but you can kind of see how bear proxies look. Now, if anything, this is probably a good example. Nice little double top up there. And we're just slowly breaking down on momentum. I wouldn't be surprised if we see a bit of weakness here into the end of the month, along with the stock market, January barometer talk, that kind of stuff. Yeah, now I got to move this over. Actually, Sjord, you're seeing this now. I don't know why the engine does this. I don't know why it's starting as of that date, but I have to like manually move this stuff over. There's a good example. ETC versus ETH. That looks pretty nasty. Probably needs to come down a bit. I don't know whether I'd be really interested in shorting something like that. I don't really like the idea of shorting at the bottom ends of ranges. That's not really my style. So anyway, lots of stuff for you to chew on. Of course, we are building out this signaling system, so you should be able to build your own screeners as well. Maybe we'll get into that in the after show. So I think probably the final thing that I'll leave you off with, like I said, I did hop on the Bitcoin long position there. I feel relatively comfortable. And of course that the algorithm itself looks pretty nasty. Was thinking about shorts. This didn't really set up very well, but I did notice that there were a heck of a lot of bearish dips that were forming. Interesting how some bull dips are coming in. But one indicator that I actually like to use a lot is, and it's a spread relationship between the forwards contract and the spot contract. Now, I don't know whether this is even usable nowadays. The June 2023 versus the cash index half-hour chart. And I noticed when this thing spikes, that's usually when Bitcoin dumps. And it's pretty consistent. Whenever we get these spike moves, Bitcoin has some pretty intense bearish price action. So I was a bit surprised to see this morning. Big jump up here. Now we are up against the top end of the range, so maybe things are going to calm down here a bit. There's your Bitcoin dominance. So it's kind of flatlining right now. And then there's your total market cap. You can kind of see it's even starting to roll over. So, if you had the tenacity to come in and buy this breakout down below here, for heaven's sakes, I mean, you don't necessarily need to sell everything, but, for the purposes of our trading plan, I will, and I'll just go and buy the exact same position right back when I actually do get another sort of bullish reading out of the algo. But where are we here? I guess anyway, I'll load that up there. One thing I did notice that really jumped out at me using the dashboard yesterday was, I gotta say that, if you're ever going to have like a signal that you ought to pay attention to using this breadth indicator, when you ever get the short-term momentum signal and the medium-term momentum signal both flashing this egregiously overbought condition like this, that is a major warning sign. So that's what the histogram looked like yesterday. And then, like I said, you had the actual indicator itself. It was sitting up at 100 on both short and medium. It finally broke. So that's enough for me to say, fine, more than happy to hop off. And if anything, what I'd love to see, of course, you guys don't want to see this, but I would love to see this now work its way to now where it's short term, heavily oversold on both the short and medium term. And then we get a nice bullish cross like we saw over here. And then I'll hop right back in on the long side. So I'm feeling pretty good. I mean, there was the trade. Like I said, if you actually had the balls to step in and buy that, and you're not taking at least some profits here, come on. Maybe you're being a little bit greedy. Okay, why don't we leave the 30-minute summary? I think that was about 30, 35 minutes. Hopefully you got a pretty good idea of what we're thinking over here at TRI. Slow and steady wins the race. I don't think we're going anywhere in a hurry, right one directional. 2023 should be a lot of chop. And as I said, I'm kind of thinking that for actually the remainder of January, at least for the next week or two, especially going through that options expiry, the big leap expiry, I wouldn't be surprised if we actually have to come back down to earth a little bit on these stock indexes. Anyway, we'll see. All right, everybody, have yourselves a fantastic rest of your day. Sure hope you enjoyed that summary. PMA for the win. All the best. Only thing left for Brian to say is bye or bye for now. Bye.